All right, Mokama Sunday service. Today we are going to be talking about sector rotation, um, and a strategy for sector rotation to a certain extent, where it's more so like sector rotation for me is when all of the big hedge funds and all of the big money, they're shifting money between different sectors for various reasons. We're not talking about retail traders like us, the small money. We're talking about where the big money is going, right? The pension funds and things of that nature. Um, and for me, it's still about like finding what the trend is. And that's why I think it's important, especially if you're doing any day trading or any swing trading. Not so much for long term moves, right? Because there's going to be sector rotation during certain events, certain parts of the month. Uh, every quarter potentially, right? These big kind of shifts in the market, but if you're picking good stocks or you have an ETF of the total market, generally, at least recently in a bull market, the market's been going up, right? If you're just investing long term, setting it and forgetting it, or like dollar cost averaging into the market, but if you're day trading, you're swing trading, finding the trend and where the money is going this month versus next month is important to figure out. Like, hey, where are people cashing out, and where are people like buying in, right? So I always use this analogy like for the stock market. The stock market is like an engine. It is made up of four major cylinders, right? Those cylinders are the Dow Jones. And I'm putting the futures ticker down here, backslash YM, because the futures are open 23 hours a day. So if you really want to know what an index looks like at any given time in the day, it's better to look at the futures rather than like the index itself or an ETF of the index, right? So NASDAQ 100 and Q, this is going to be really heavy tech. The third cylinder is the S&P 500, which is the best, I would say, general barometer of the overall stock market. And then the Russell 2000, which is going to be a lot of small caps and a lot of regional banks. Nothing is really generally heavily weighted in the Russell 2000. They're all kind of like a lot of equally weighted stocks, right? So, um, as I stated before, and actually, this is what I wanted to do. Let me go to Thinkorswim. And where is it? There we go. So Thinkorswim, if you go to the Market Watch tab and look at the indices, you can kind of see what makes up these four cylinders in the engine that is the stock market, right? And I'm describing it as an engine because it's really hard if two of those cylinders are going in reverse and the other two are going in the other direction, right? You're not going to see a massive increase in the entire stock market. You might see a lot of chop. And that's what I mean kind of by sector rotation, right? You might see two of those indices up and then two of those indices down. And while one particular indice or and the sectors within it are going up, the other sectors are going down. So the overall stock market may just be choppy rather than going in one particular direction. Now, if you wake up in the morning and you see all four of those indices blasting off, that means the entire stock market, like every boat is rising on that particular day, right? So it's just in terms of like overall market sentiment, to just have an understanding of like what's happening that day, that week, that month, right? Is the entire economy blasting off, or is it just a particular sector or two, right? So if we look at the Dow Jones does have a lot of tech in it, right? It's heavily weighted Microsoft, Nvidia, Apple, right? So these are, if you start looking at and start breaking down the sectors in a lot of these indices, you'll start seeing that a lot of these indices are heavily weighted, like with three or four companies. Those tend to be Nvidia right now, Microsoft, and Apple, right? And then you see Dow Jones also has a lot of Amazon as well. And these other sectors are going to be consumer staples, healthcare, financials, uh, industrials, communication services, right? But in terms of the weighting, it does have a bunch of tech. So it's really hard for the market to go up at all if Apple, Nvidia, and Microsoft have a bad day. If you're just looking at like how the indexes are weighted, right? If Apple, Nvidia, and Microsoft are having a bad day, it's going to be very hard for us to have a positive day in almost any of these sectors, right? So if we look at the Nasdaq, same thing. You see heavily weighted Nvidia and Microsoft, and Apple not so much in the Nasdaq now, right? And you see here again Amazon. Specifically, NAS is going to be heavy tech. So when we're talking about tech, we are talking about information technology, semis, because right, even NVIDIA, AVGO, AMD, a lot of these are in the semi sector. Apple, you're also talking about the communication services, which is primarily Google and Meta. Netflix is in there as well, and a lot of the phone companies. And then consumer discretionary, which is primarily Amazon and Tesla. And then it does have some of these other little like Starbucks that has nothing to do with technology, and generally like a couple of others in there, like Ross, for instance, Lululemon, that aren't technology companies. But just to kind of round it out, but the NASDAQ is primarily a tech sector, right? A tech index. So if tech is having a bad day, the NASDAQ is going to have a bad day. And so the Dow, while it has a lot of tech in it, it can survive a bad day from the major tech names because it has all of these other sectors as well. Consumer staples, right? If financials, healthcare, consumer staples, and industrials are up, and the tech is not down as much, the Dow could still have a positive day versus the Nasdaq. If all of tech is down, the Nasdaq is going to be negative. If you look at the Russell is a bunch of small caps, some of which most of us aren't going to know the names or even the stocks that comprise a lot of the Russell 2000. And if you look at the S&P 500, this is what I mean by this is probably the best view of the overall stock market. As you see, things are a little bit more equally weighted, right? You see NVIDIA still, Microsoft and Apple as heavily weighted names in the S&P 500, but then you also see a lot of other sectors that comprise of the S&P 500. So the S&P 500 isn't really the captain of its own ship because it has a lot of the Dow and a lot of the NASDAQ inside of it, right? So if those two are divided, if the NASDAQ and the Dow are, well, let's say the NASDAQ is up and the Dow is down, the S&P 500 is more likely to be flat and vice versa, right? Because it just has, it's a general barometer of the stock market. It has like every sector in it, right? It's still heavily weighted tech, like most of the stock market is and most of the indexes are right now, or indices are. But it does have a lot of other components inside, right? All right, we take that down. So specifically, like sector rotation events, at least from what I've seen over the last 2 to 3 years of trading, earnings. And I'm bringing this up because we have some significant earnings this week coming up. We got Microsoft reporting, Meta reporting, Tesla reporting, Apple reporting, Amazon reporting. Some of these big names that we just saw that comprise of the index, that comprise some of the four indices that we just talked about, are reporting this week, right? So end of month, end of quarter, I've seen, beginning of the month, usually there's like a shift. Beginning of the quarter, there's a shift. People are taking profits at the end of the month or the end of the quarter from a sector that had been rising over the last month or quarter, and then they're starting to shift into something else where they see value. We had talked about this a couple of weeks ago with healthcare specifically, where it had been down consistently, which is why I was kind of searching there as my next place to kind of buy some leaps. So that's why, and I've just seen this consistently over the last few years. People tend to shift their money around at the end of the year, end of the quarter, end of the month. Also, options expiration date, the third Friday of every month, which also is called witching, depending on like if some other things are expiring around the same date, but it's usually the third Friday of every single month. You're going to see that's when the most options expire in the stock market. And so when that happens, people are changing up their hedging. They're taking off positions, rolling over positions into the next month. And so generally around OpX, you could see a big shift in the market. And so a lot of times I will stop trading or wait to trade until some of these volatility events are over to figure out where the next trend is going to be. Where am I going to start swing trading next? We're going to see this week. We have these massive tech names reporting. Are there going to be any huge misses or any huge beats that are going to start a trend in a particular sector, right? So Microsoft, if they have this huge beat, we might start seeing a big tailwind in the tech sector. Same thing with, I know ExxonMobil is reporting on Friday. So we might see a big tailwind in the energy sector if ExxonMobil has a huge beat on earnings, right? So that's kind of what I'm looking for. And so just to kind of have you have like a cheat sheet of the sectors and the main sectors in the market and what their ETF equivalents are, right? And an ETF, for those that don't know, it's just like an all-star team of stocks in a particular sector, right? And so when you buy an ETF, you're buying an entire sector rather than just buying a particular name. The reason why you might want to buy a particular sector is because it's more risk averse, right? So if the entire tech sector is up, it doesn't matter if one or two stocks are down if they're not heavily weighted, versus if you're just putting all of your eggs in one particular stock. You could miss out on a sector going up and you just pick the wrong horse in the sector, right? Because you get some bad news or, something happens with the CEO or whatnot that tanks that particular stock, even if the sector is up. So for information technology, you got QQQ, XLK, when we're talking about tech. I would also put SMH in there. That's the semiconductor side, but it's also considered tech, right? Communication services, XLC. We talked the two major components are Meta and Google and XLC, but you also got Netflix. Those are like the three big horses of XLC. I would also consider those tech as well. And then you got consumer discretionary, which is XLY. Two biggest components are Amazon and Tesla, also kind of a tech component or a tech sector, which is why I have those three listed first. Then you got the financial sector, healthcare, industrials, energy. Those are mostly moving the Dow. Consumer staples, same thing. Utilities, real estate. And then the S&P is going to have a huge mix of all of these things. All right. So once again, big earnings week: Microsoft, Meta, Tesla, Apple, Visa, Amazon, right? And a lot of these are big movers in these sectors. So Microsoft is going to move all of the indices that we just talked about, except for the Russell. Meta is going to move XLC. Tesla is going to move XLY. Apple's going to move most of the indices, or two to three out of four out of the major indices. Visa is going to move XLF. Amazon's going to move XLY. And in fact, XLY, the two major components of it are reporting this week. So watch your head in terms of trading. I like to get out of my trades prior to the reports because you just never know what's going to happen. And sometimes good news is bad news is good news when it comes to reports as well. So even reading the tea leaves, even if you had the reports early, is very hard. Right. So in terms of a specific strategy, for me, if I'm looking at a long-term leap, which is an option that expires maybe a year or so out for me, I'm looking for something that is probably way discounted, that has been down over the last quarter. that people have been selling off for a while, and then ideally it's kind of leveled out where most of the selling is done. And that's when I'm looking for, hey, maybe this next quarter, this next month, after OPEX, after earnings, people are going to start maybe pouring into this particular sector. And also from like a seasonality standpoint, healthcare, consumer staples, I think is down the most right now in terms of like the most negative. These are like safety stocks, and right now people are feeling optimistic with the new president's economic policies and whatnot. So yeah, people are feeling optimistic. So you might see some healthcare lag, or you might see some consumer staples lag because people aren't thinking safety right now. People are accepting a little bit more risk, and people have been on the sidelines with capital for a long time. So hopefully we keep seeing a boom. But I think these earnings next week are going to determine that, right? If all of these players, these are what, six of the Mag Seven right here. Well, no, five of the Mag Seven because Visa's not in it. Magnificent Seven. If these companies are reporting record earnings and significant beats, then that's going to bode well that we're going to keep going up, right? We're going to continue into this bull market. And then the last one is going to be Nvidia, of course, that usually tends to report later, right? So in terms of weekly stock picks for this week, January 27th, right? With my disclaimer, and this is for the entire podcast, the entire video. This is for informational purposes only. I am not a licensed financial professional. You should refer your trades and investments to your licensed financial professionals. Trading is risky. Investing is risky. You can lose money. So do so at your own peril, and do your own research. Educate yourself. That's the whole purpose of this video and this channel, right? So how would I build my watch list for the week? I like going to Koyfin, Koyfin. It's a free app. And then I'm just looking at what's been hot. And really, what's crazy is like I haven't been looking at energy for a few months, but energy is what's been hot over the last month, right? Oil services, oil and gas, and specifically XLE. So the major components, CVX, Chevron, ExxonMobil, ConocoPhillips. So this is specifically XLE. Right, I missed a pullback on this day, but I'm actually glad I didn't grab it because it looks like it went down a little further. But this looks like the best trending sector to me right now. And when we're talking about sector rotation on a short term, this is what I'm talking about. I haven't really been interested in XLE for months on end, but it looks like it's starting to trend. It's like this is where the big money is. They've been putting money into oil over the last month or so. So now what I'm doing is I'm waiting for this to pull back, have a significant pullback day, and potentially hop in for a continuation to the upside, right? And then if you're looking at some of these other sectors, XME, which was down crazy like a month and a half, 2 months ago, is now starting to trend now. So I might start looking at metals and mining, and GDX, gold miners. So for me, those are like the sectors that are doing well, even the industrials, the financials as well. But I've been looking at some of the indexes, and some of the things have been real choppy lately. So I'm really waiting on this earnings period to kind of finish to figure out like where the market's going to go, right? Because if we see poor earnings from 4 or 5 out of these major damn near $1 trillion companies, then usually people are going to flock to safety. And if they're flocking to safety, then you might start seeing consumer staples like the Coca-Colas, the Pepsis of the world, the Walmarts, the Costcos. You might start seeing the consumer staple group starting to come up, or healthcare, which is usually a safety stock or a safety sector as well. So to be honest, I'm not expecting to trade much, if at all, this week. I will probably, if there is a day that I start entering some trades, it's probably going to be like on Friday after a lot of these major companies have reported. And I'm sure since we're in the thick of earnings, I haven't looked at the week after next, but I'm sure there's probably a few huge companies reporting the week after next, probably like the Googles of the world and whatnot as well. So I'm waiting at least on some of these major names until we get some more news coming out to figure out like which way they're going to go. Right. And other than that, I don't really have an NC Energy because we got ExxonMobil on Friday, so I might look for an energy trade if something triggers on Monday or Tuesday. But chances are I'm going to be out before Friday because if ExxonMobil is going to move XLE tremendously because it is heavily weighted in there. So that's really in terms of my swing trading for this week. Maybe some energy names if I catch a pullback on Monday or Tuesday. But that's about it. I've been seeing a lot of chop in the market recently, just a lot of up and down where it doesn't seem like there's really any great direction. And for me, at least in my strategy, because I don't really trade iron condors, I'm looking for some sort of consistent direction in the market. And I'm just seeing a lot of chop. Like if we look at the ES, it looks like it finally made a new high, but then didn't blast through. It came back down. Right, so I'm seeing a lot of chop between like this level and like down here. Same thing with so that's the S&P 500, the general stock market. We look at the Dow, same thing here. If we can see a breakout above like 452,000 or something like that. Seeing a lot of chop. Hoping to see and actually if we have amazing earnings, this could blast us through this top, but this is what we've been getting a lot recently is just a lot of chop this entire month, I would say, coming into January. At the end of December into January, we've been getting a lot of chop. And then the Russells, the last cylinder we talked about, same thing. This one's been a little weaker. A lot of chop. So I'm not seeing any major trends. And then this actually makes sense from looking at the individual sectors within these indices. The reason why they're not going anywhere is because like the entire market's been kind of chopping around trying to find some direction at the end of December into early January. At least that's my look at it, right? So that's what I'm waiting for. It's like, what's the next breakout? What's the next sector that looks the healthiest, right? If you look at even XLE has been trending a little bit, but if you kind of zoom out, it hasn't really like gotten past this like $98 mark, this last recent high, right? It's still kind of chopping around too, but just recently it had a little bit of a run, right? So it's like the most trending name, and it's had a few red candle days, right? So, yeah, that might be the only thing that I'm looking at, hoping that this continues because I'm seeing higher lows, right? And if this holds here, right, then maybe this keeps trending up. But everything else I'm looking at, maybe SMH. No, even SMH has been kind of choppy. I'm seeing a bunch of chop. All right, this is a short one. That's all I got for today. Anything you want to look at, Ange?
Not that I can think of. What do you think about in this market? Well, it'll change with the upcoming earnings reports, probably, but like selling covered calls right now.
Well, in order to sell covered calls, you have to have 100 shares of stock.
Yeah, you gotta have 100 shares of stock, which most of these
So
most
selling
people aren't gonna have. But
so selling covered calls on what stock particularly? What do you have 100 shares of?
I have 100 shares of Amazon.
Well, do you want to keep Amazon long term?
Yeah, well, honestly, I have two different accounts. I have an account where I have long term than that. Like an account for trading and an account for long term. For the ones I sell covered call, I try to look for ones that are less expensive. So Marathon, I did pretty well on Marathon, but it's not a stock that the financials are the best. But it's been kind of staying flat, so it works for cover calls.
Well,
I was thinking about
but
maybe
do you have 100 shares of Marathon too?
yeah, yeah, yeah,
Okay,
yeah.
got it.
It's only like a $19 stock.
Got it.
Um, Another one I was thinking about was Schwab actually, but Schwab recently took a big leap and went up to like 80 something. It was hovering around 60 for a while.
See, I'm looking at Amazon. If I used to have some Amazon, I'm. It looks bullish, so it's going to need to probably have a significant earnings beat for it to top its all-time high. But I'm
Mhm.
rarely ever trying to sell something that's at an all-time high. Because I've because I look at, so just in comparison, so that Shopify leap that I have, I would potentially consider. Well, not only that, I already sold two out of my three leaps because it's nowhere near its all time high. But like looking at Amazon, look at how bullish that looks. And do I think Amazon's gonna get smaller?
Probably not. Yeah,
No. So that's always what I'm looking like. So you're risking potentially getting out of something that could be a generational trade if you just hold it. And I assume on your Amazon position, are you up?
yeah.
Yeah.
No, and I wouldn't. I probably wouldn't do it on the 100 I had. It probably would be
But
yeah, but that's a
but you
lot
would
to
have
get
to
unless
put
you
up
use
like
margin.
23. You would have to put up twenty-three thousand
Yeah,
dollars in cash to just sell
yeah,
to
unless
make
you do it on margin,
$100
which
or
I really
something.
don't agree with. Yeah,
Yeah.
and so maybe Amazon was a bad example. Maybe
Um.
Amazon was a bad example. I have other examples I can send to you
What's
that are cheaper stocks.
uh.
Which allow you to do it.
For me, if I were the only way that I would get into a covered call would be if I were like doing cash secured puts, trying to make money that way. And
Mm,
I get assigned stock, and then I would sell cover calls against it in like a wheel strategy. Like, and I'm just telling you in terms of like that's the only time that I've ever sold cover calls because
yeah,
typically the stuff that's in my long term portfolio, I believe in it.
you want to take to the moon. Yeah,
Yeah,
I
like
feel
I
you.
want to hold it for 5 years. I don't even want there to be an opportunity for me to get pushed out of the stock, or if I were to sell cover calls, I would be selling them before the volatility events like earnings and then getting out of them before earnings because you just don't know which way the pop is going to go, you know.
Yeah,
Because it's really you're trying to earn extra cash off of whatever you currently own if you're selling cover calls. So
yeah, exactly,
it's a cash play, right? Like making
exactly.
$100 a week off of a contract or something like that, or $200 a week.
Yeah,
So that's my. I don't know if I would anything that I want to buy 100 shares of. I wouldn't kind of get into it that way. But if you're just trying to get premium, why don't you just sell uh, puts or sell calls? It's the same thing.
sell puts on.
Well,
I would
I'm
only so for me selling
well
puts. I would only
well
do it on
spreads
a stock.
and I mean selling put
Oh,
spreads or selling call spreads
spread.
in
I
a
got you.
particular because it's similar. It's the same thing. If you're just trying to kind of get premium and you're like, if you're selling cover calls, you're just trying to make money off time decay, right?
Yes, just
So,
yeah, exactly.
but I don't know if I would put up even what's Marathon's ticker,
MARA.
because that's still what $20. So you 20 times 100, you got to put up $2,000 of cash to buy 100 shares of something that I'm looking at the stock. I don't know if I want to even hold. This is not something I would want to hold long term.
Mm-hmm.
So you can do the same thing by just selling call spreads or put spreads on it. So if you're essentially saying, hey, I want to sell covered calls at like 24, at a strike of 24 or 22 or whatever, right? Meaning you
Mm-hmm.
don't think it's, and probably if looking at the chart, it'd probably be around 28, right? I don't know what you're looking at. I'm just looking at where the recent highs were.
Yeah,
So maybe at 26, right? But like where I would be looking to short this thing would be close to like 28, just looking at where the recent highs were. So if I
yeah,
were selling, if you were selling a call right here, it's essentially the same thing as like selling a call spread. You're betting on this thing to come down if it hits like 28, you know?
yeah, yeah.
It's kind of the same thing. Um, and I just don't know if I would want to hold 100 shares of a stock that looks like this. Like it's slightly going up, but I don't like that $2,000 could probably be like there's other stocks that look better than this that are probably priced around the same amount. And I'm not certain, but I don't know if I would put up the capital on
To be in,
to just be in a cover call. Now, like I said, if I were selling a cash secure put like at $14 and just collecting cash because it never comes down there, and then one week it gets down to 13.95 and I get signed 100 shares, then that's when I would be selling covered calls. But it'd be part of like an overall will strategy. You feel me?
yeah, yeah. And so with this one, like, my, I wouldn't even purchase the stock at like 16, because that's where I've seen a lot of exhaustion, like around like the $16 area. Um,
Yeah, even like, well, this is a few months. Yeah, the recents be like 1650,
yeah,
maybe even higher, like 1675. That's where the recent lows were. But yeah, I don't know, but even then, oh, I guess cash secure puts on this wouldn't even be that expensive, so you could probably collect some cash. And then for me, it's just like how much premium can I potentially get? And I don't like the fact that it doesn't have weekly options; it only has monthly options. So if
no,
I
it has. Well, I do it on E Trade. I don't do it on here. On E Trade, it has weekly options.
interesting, well, at least are you sure this is the right stock, Mara MARA?
MARA.
Yeah.
Yeah.
Let's see. Well, coming into this Friday,
No, I haven't checked it out. Maybe something changed, but I haven't checked. Um,
there's not a ton of premium, so it's like $40. Like, so you'd have to go further out.
yeah,
Yeah, I don't know if I put up 2 grand to make like because what did I say, like 22 wherever it was. Let's say if it no even like 26 is like you don't get any premium for that. I don't for like $30. I don't know if I'd put up 2 grand to make $30. I would do
yeah,
that. I like doing that on stocks that I actually want to own. So like when I was saying AMD, I know I want that at 110, right?
yeah. I was looking for that. It came down like what? Like I don't remember what it came down to, but it never hit 110. What is that? 120 now?
Yeah, it's at 122. So
Yeah,
like for me, I could sell a put for 110, but look, that doesn't give me any premium. That gives me $12. So
yeah.
like that wouldn't
Wouldn't even work.
necessarily be worth it to me. So it would need to be like closer. So if this was at like 115 and maybe I could get $100 waiting for it to get my price down, then maybe. But then I don't.
Yeah,
But then that would be if I'm trying to buy AMD shares, which I'm not. I'm trying to do a leap on AMD. So I'm just saying, but I would do
I
it
get you.
on something like this, but that's not how I want to trade AMD. That's why I wouldn't do this particular trade at this moment. I would take a leap on AMD rather than trying to pick up the shares.
Is that just from a cost basis or what?
Yeah, because I have more leverage with the leap. So like
Yeah,
I got
yeah,
to put up $12,000 to get 100 shares of AMD versus if I go out to January 16th and do buy a call on it at a level with some good liquidity, at like that 70 strike, that's $5,800. So I could go control 200 shares of AMD with the same amount of money that it would cost me to have to put up for a cash secure put on AMD or get into the shares.
Yeah.
You feel me?
But then you sell, and then in the year would you sell it or would you
I don't know because I thought I was gonna
see
sell
where
my
it was?
Google Leap, but look at where Google is now.
Yeah, yeah, yeah.
I thought, look, I thought I was gonna sell my last Google Leap at 190. Now it's at 200. I'm like, you know what? Maybe I should just get assigned to shares because
Mm-hmm.
my strike price. Let me show you my strike.
Because in the end, it still costs to play the game. Like it costs to
Yeah,
get the shares.
yeah. My strike price on Google is $80, and it's at
Oh man.
$200. So, and I got three of these, right?
Mm-hmm.
So I'm up on that. Same thing with Shopify. My strike price on Shopify is $25. Shopify is at 107. So
That's crazy.
I'm able to get 100 shares for $25 and it's currently at 107. And same thing for Google. I'm able to get 100 shares at $80 and it's at $200. So I thought I was going to potentially, but I got options now, right? I'm up so much on these trades, and like, depending on how these companies report, if they take off, like, yeah, I'm just gonna keep them.
Yeah.
And they were
Yeah, yeah.
saying like there were record Black Friday sales this year, so I assume Shopify is going to report blast out earnings in the last quarter from the Christmas sales, right? And then Google, now that we got a new Trump administration, and I'm seeing the CEO and stuff at the inauguration, I'm reading the tea leaves that the DOJ monopoly suits are about to get dropped. So I'm like, you know what? I might hold on to this, right? Because
Yeah.
that's the biggest existential threat to Google right now is the government. And so if I'm
Mm-hmm.
seeing them at the inauguration and whatnot, I'm like, hey, you know, I might want to hold on to these shares at least for the next 4 years.
Yeah,
So
yeah, yeah,
yeah,
yeah. Trump
so
is
that's I think the government's going to be a lot more lax on the tech companies because they came and kissed the ring, you know.
exactly,
Yep.
exactly.
So that's just how I feel. I could be wrong, but you know the administration, they're firing everybody that was over on all that was overseeing all of these cases against these big tech companies. Some of the book ban stuff, just all of this stuff. There's going to be a wholesale change in terms of what the DOJ's priorities are, and just seeing how all of these tech CEOs are on board right now. Trump, tends to not pay attention to them. That's really all they want, to not be paid attention to for the next 4 years.
Yeah,
Yeah.
yeah. Let it run wild, run
Yep.
wild.
Exactly. So that's my calculus. So yes, I did want to sell these, but then just seeing like, man, how deep in the money they are. Maybe I just hold them until expiration, get assigned these shares, and then keep them.
Yeah, and then right out. Yeah,
Yeah.
everything else. Yeah.
Yeah. So the only one I'm kicking myself on, I had an Apple Leap that I sold. I made good money off of it, but I can't say that though because I replaced that Leap with the Shopify Leap, and the Shopify Leap made me more money. So I can't say that.
Yeah.
Um, I use that capital to get into the Shop Leap. So, but I'm more sold on Apple than Shopify. But Shopify is making a great comeback. I just saw how deep, if we're talking about just discounts, I saw how
Mm-hmm.
deep that discount was. I got in, I think, around this level, somewhere around here at this 200. Um,
Mm-hmm.
and yeah, it's just been continuously. It pulled back a little bit, scared me a little bit, but then just kept coming up. So I use it for my bookstore, and
Mm-hmm.
we've used a bunch of other e-commerce platforms, and it's just the best out right now. So easiest to use, best integrations. Um, so I think they're going to win the e-commerce war. Uh, Outside of Amazon, let's say, I think they're going to be they're more likely to catch up to Amazon than anyone else because of their ecosystem of, like, if you want to get a shop up tomorrow, Like right away, the easiest thing you could do is just open up a
Yours.
Shopify account. Yeah,
Yeah.
you could be
Interesting.
up in a day or two selling T-shirts, whatever you're selling.
Okay.
So yeah, but yeah, if we're talking about the stuff that's reporting, so like Meta, and I don't know if they're gonna have any huge misses, but if you're looking for a pullback this next week or so, this is when you're gonna
This
get
will
the
be the time to
pullback,
look.
right? Somebody ain't gonna report like great earnings.
Yeah.
I bet it's Tesla if you ask me, but
Mm,
Tesla, Meta, what did I say? Apple's actually down. Oh, I haven't even been looking at this. Shoot. Apple's a good one. If it comes back, like if their iPhone sales are down or something, and it pulls back to like this level, that 180 level,
yeah.
and actually 166, 160 is where I got in on that leap the last time. That's really where I want it. That's why I've had this alert on for a long time. But yeah, if Apple's at its 200 day actually right now, if you're more aggressive, Apple's kissing that right now. I just I have a different long term view on Apple because it doesn't sell anything but the iPhone. So as soon as those
That this
sales,
is allowed for innovation.
yeah, it needs to do something else that people care about.
Yeah.
Like it needs to do
Yeah.
something else that people care about. What else is here? And Visa had been, yeah, Visa's been killing. So Visa would have been one to get in a while back too. Visa's been doing amazing because interest rates are up. So credit card debt is up, right?
Mm,
Right? If you're just thinking about the macro, look at since interest rates have been up, Visa's been killing. MasterCard's reporting too, same thing. The credit card companies have been killing. I haven't seen
yeah.
this.
I looked at Amex. Amex is pretty high too.
Yeah, I think though Amex just had a bad. What's Amex again?
AM.
Uh, AM. Damn
It's
it.
not just AM. It's AM or something.
What's Amex ticker? Hold on. Amex's ticker is AXP.
AXP. There you go.
I feel like this dropped a little bit of earnings, but yeah, no. Look at the credit card companies. Oh, I
Yeah,
should have
that's what
got
I've
it.
been getting it in for a while.
I should have got in there. Just thinking too. So like, if we're talking about playbooks for the future, if we're ever in a low interest rate environment and we see a hike of interest rates, get into the credit card companies.
Mm,
Right, just playbooks that I'm thinking like, because right, we're gonna see these cycles over and over again throughout our lifetime. So
yeah.
for me, I'm just trying to recognize patterns for the future. Like, so if I ever see that again, if we go to low interest rates and then we hike interest rates crazy, I need to get into the credit card companies,
Yeah.
and it just makes sense, right? Higher
Yeah.
interest rates, they make more money, but all of them have been crazy. Like if you would have got in a year ago, like you would have made. It wouldn't have mattered which one you picked. And we're talking about sectors too. Like if you were in this credit card sector, it wouldn't matter which one you picked. You would have made money on any of them, right?
Yeah.
Visa, Apple. Yeah, I'm looking at Apple though. So this one might be on my list. Like if it come down to that, I know it's gonna probably have a big stop at 200. Let me. I don't know. Maybe. No, I've been doing better on my leaps because I would probably take
Mm-hmm.
this with the leap at these fib levels, at these major levels. So like around
Yeah.
182, I'd be interested in Apple. I'm really interested if it drops down below 170 and gets to like this 160 mark. Oh, but if you
Nice.
look at how exhausted it already is, though. Oh Lord. Because look, and then also if you zoom out, Look at, so this is the RSI, right, which is relative strength indicator. If you look at these levels, this is where it like tends to bounce. So here in March, it hit that level and then kind of bounced up from there. But this is real exhaustion. This is why I set my settings to 20. Because if it gets down to 20, it's so exhausted that people are probably going to start buying again. Apple will have to have like the hugest miss in the world, and Tim Cook is just too great
That's
of
what I
a.
was saying. It's like, man, I don't have so far.
This is actually the best value right now. Just looking at Apple, especially if you can catch like if it. I don't know though, man, because look, if Apple pulled back this much, the expectations are going to be very low. Because I look at, so when I've been playing, like I haven't played earnings, but just I've been thinking about playing earnings. Like
Mm-hmm.
if I'm looking at the last 2 or 3 weeks of Apple in January, Apple has pulled back significantly, right? What's 215 divided by 260? It's already had an 18% pullback from the all-time high, right? So it's already somewhat discounted. It's near a good support level in this 200-day moving average. And all it has to do is slightly beat earnings, and this thing could go up to the moon again, because I feel
Yeah.
like it has low expectations now.
Yeah.
Because like the wind has already been like punched out of the sail already. Versus like we just saw Visa. Visa is going to have really high expectations because it's up.
Yeah.
So it's going to need to blow earnings out of the water. If it just comes in and narrowly beats, then I have a feeling Visa is going to go down, So
Mm-hmm.
Apple pre-earnings is probably this, I would say, safer to hop in because it's already coming down. But if it has and if it doesn't meet its earnings expectations and come down, maybe that 200 level does look pretty good though. I like that 200 level
Yeah.
because I think I got in. Yeah, I got in and I shouldn't have got out. I made some money, but I shouldn't have got out. But Apple, yeah, it keeps on ticking. It does need to find another product from a fundamental standpoint, but just looking at the technicals, whenever it comes all the way down to like 30 on the RSI, it does tend to bounce, or it tends to be a good level to buy it, right? So yeah, I like extreme exhaustion though. Like if it comes down to 20, then on this 5-year chart, I'm gonna think about buying it. At least a leap, right? And it's like Apple ain't going out of business anytime soon. So like in terms
That's
of like
true.
safety on a leap, like it's one of the safest leaps that you can probably buy because like even if Apple doesn't go up, Apple's not going out of business anytime soon.
True.
I'm I'm
True.
I'm uh I'm on a Mac laptop. I'm sure you have an Apple phone, right?
Yeah.
And I'm sure your kids or your wife got an Apple phone, right?
Yeah.
So there you go. So what are you gonna replace it with? Have you thought about
Yeah.
replacing your iPhone?
Nah, not really.
So there you
Never
go.
really.
So there you go.
Yeah. I mean, you just gotta have it. Being a creature of
Yeah,
habit.
exactly. So I don't think they're going anywhere. And then if they do happen to get on the right side of AI or some other major product, then this is a safer bet. So yeah, Apple. I'm just looking. Yeah, Apple looks good. The lowest it's come, I'm just looking at a 200 week average. Yeah, that 182, that would be like my optimal level right now for getting in. Around 182. Like 167, 168 would be amazing. But I love that 182 level. If it can come down and break this support right here, like where this big candle is, it's like around
Mm-hmm.
200, it's likely to bounce. But if it can break that and come back down to this fib, I'd probably be looking to get into Apple right there at 180, at 180, 182. And then the leaps on Apple, I assume, are liquid because Everyone's always look at how a year out Apple has tremendous liquidity in the leaps. So I'd probably be looking at like this 150 because I like to be deep. I like to be deep in the money in my leaps. So I'd be looking at that. But once again, this is less than half the price of buying 100 shares.
Yeah.
All right, that's it. That's it for this week. The babies are up. Breakfast is being made by my wife.
Yeah.
Bless her
All right,
heart.
man.
Yeah. All right, fellas. I'll see
All
y'all
right,
next
appreciate
week. Mokama Sunday service, making it rain without the umbrellas. 8 a.m. every Sunday. Deuces.
All right.
All right, peace.
Have a good week. Bye.
You too.